Hi, thanks for tuning in to this webinar, which is being hosted by TMA from the Mortgage Lender. What we're going to be doing is taking a little look at the buy-to-let market and also some of the changes that we've seen since the pandemic started earlier this year. So my name's Louise Apollonio and I'm a National Account Manager here at the Mortgage Lender. So first of all, what I really wanted to do is just start off by thanking both TMA in terms of the club, but also the TMA members for their continued support in submitting business to us, not only over numerous years, but more importantly, over the last 5 months, which has been a quite difficult time. We have continued to see record numbers in applications. So we saw a record number of applications both in June and July, where we achieved over 100 million in terms of application numbers, which is absolutely fantastic. And heading towards the end of August, it's looking like the same is going to happen at the end of this month. So we really do thank everybody for their continued support. So let's take a look at the agenda and the areas that I'm going to cover off today within the presentation. So everybody knows there's been significant changes over the last 5 months within the whole market, but more importantly across the buy-to-let market as well. So what I'm going to do is take a look at the current situation, but also look back at the impact of lockdown and what that had on the buy-to-let market. I'm also going to cover off the importance actually of advisors now and advising clients on the many products in the market, but also the opportunities within the market as well, and how the role of the advisor is becoming even more important. And also what I'll do is I'll cover off the proposition that we have here at the Mortgage Lender and how we can help you and your clients. So we'll be looking at the different types of products and criteria, including our portfolio multi-loan product, the larger loan proposition that we have, and also the expat mortgages proposition as well. So what this slide shows is actually the broker activity and how we've seen that change since April this year. So looking at the figures in terms of search volumes, in April we saw 115,000 searches within the buy-to-let space. Now taking that to July, that number's increased to 220,000, which is an absolutely huge increase just 3 months later. It really shows the opportunities that are currently within the market and the appetite for landlords to either remortgage current properties, but also purchasing and taking capital raising on existing portfolios to increase their portfolio size. So there has been a steady increase month on month, and that's also shown in terms of the illustration volumes, which is near the bottom of the screen. So the bottom of the screen you can see the illustration volumes rising from 21,000 back in April up to 38,000 in the latest month, which is July, and like you can see that steady increase month on month. So it really does show the huge opportunity within the buy-to-let space and actually how buoyant the market really is and the strength of the buy-to-let market as it stands at the moment. A real opportunity for advisors that are currently advising within that area, but also for those advisors that may actually find that the majority of their mortgages are residential, but actually there's a clear opportunity to move into the buy-to-let market too based on these volumes. So let's take a little look at the rental demand currently. So looking back first of all to the kind of start of April up until mid-April, we started to see an increased demand in terms of rental inquiries, and that's actually continued after the easing of lockdown as well, with record levels of rental inquiries and Rightmove themselves up 33% versus the same time last year in 2019. With the lack of higher LTVs within the residential space, it's even harder now for first-time buyers to make that first transaction for their first house purchase, with the need for those higher deposits. So it's expected that the rental demand is still going to continue moving forward for the rest of this year. So let's take a look at the change in the Buyselect products over the last few months. This slide actually shows the huge increase in products and also how intermediaries like yourselves play a vital role with your clients in ensuring they're up to date on all of the products available, but also the best products out there for them as well. So just taking a look at the numbers then. So March and April clearly show a period where some lenders either had to completely exit the market or just pause their current proposition due to the situation with COVID. At TML, we were able to continuously work with brokers like yourselves and continue on with our product offering right throughout the pandemic with very little change, even during a difficult time. So what we've tried to do is support advisors as best as we can and try to keep our proposition as consistent as possible in terms of our products and criteria. Okay, but it's clear that clients have got more choice, more than ever, in terms of products, and your role as brokers absolutely play a significant part in helping them place these cases. So now we've taken a little look at the market itself and the changes that we've seen over the last 5 months. What I want to do is just move on to how the mortgage lender can help your clients and the types of products and criteria that we now have available for your either portfolio landlords or individual landlords just making those first transactions. So our proposition means that we can lend in England, Scotland and Wales up to 75% LTV, and also the products are all available to either individuals, limited companies and also expat buy-to-let as well. So the minimum loan starts at 25,001 with a maximum loan in total of 1.5 million. Now, an area that a lot of people find that they can take advantage of is our minimum property valuation. So our minimum property value is 50,000 for a standard property, which actually works out great if you've got landlords that are looking to buy property potentially up north where property prices tend to be lower but rental yield higher. Also minimum property valuations of 120,000 if it is HMO or any properties down in the southeast and London. So we're not looking for a minimum income for landlords. We just need to know that there is some earned income. Now that can come from employment, self-employment. It can just be a portfolio landlord, as long as there is some earned income there. And generally what we're looking for is the tax status of the applicant, so we can then apply the correct ICR for the affordability. So no minimum income at all required with us at the mortgage lender. So if some of you have used us in the past, you know that just at the start of the pandemic, one of the changes that we did have to make was capping capital raising at 65%. So I'm pleased to say that we changed this back up to 75% a couple of weeks ago. So we're able to do buy-to-let remortgages now up to 75% for capital raising. And all we say is if the capital raising is above 150,000 or 50% of the equity in the property, the underwriters may want to see proof of any ongoing onward purchases, just so we can get comfortable with the case. But anything below that, we're not looking for any proof at all. So also another area that proves popular on our criteria is the fact that we don't class communications or utility defaults or arrears as impaired credit. So regardless of how much or when these arrears were registered or the defaults, we're not going to class those as impaired credit. So we will completely ignore that in terms of our underwriting process. So let's just take a little look at portfolio landlords. So this is a huge area for us, and we do support lots of portfolio landlords in being able to increase their portfolios. We no longer look at the maximum number of properties with us. What we're looking at is a total aggregate borrowing for the applicant. So we're now able to go up to £5 million in terms of aggregate borrowing for each applicant. We don't limit the number of properties in the background. So for those portfolio landlords that might have 10, 20, 100 properties in the background, we don't have any limit on the number of those properties in the background. And also what makes us a little bit different is we have a specialist portfolio underwriting team. Now this team is made up of members that have all actually been brokers before themselves, so they really do understand the complexities of portfolio landlords and how to look at that portfolio to ensure that we are making the right decisions in terms of assessing that. So we do have a specialist team that can guide and help you along the way as well once you submit the case over to us. So some other areas of our criteria, so HMOs and multi-unit blocks. So we can now look at HMO houses and flats, and also multi-unit blocks where there's separate self-contained units within or on the same freehold. Another area for us where we see a lot of business coming in is properties above commercial premises. So generally what we say with properties above commercial premises, we're looking at an absolute maximum of 75% LTV. And we generally look at these on a case-by-case basis. And what I would say is these are the times to either pick up with our sales hub, which is on the main head office number, or make contact with your local BDM. We do really have a great appetite for properties above commercial, but it will be based upon the individual circumstances of that particular property and the area of the property as well. So what kind of fits one might not fit another, but we'll generally look at the case as a whole. You know, we have been able to lend above a bar in Leeds, a bar and restaurant in the centre of Leeds. We've been able to lend above a laundrette down in central London, and there's lots of different property types or premises, sorry, where, you know, on the face of it, probably the advisors thought that it's not something we're going to be able to look at, but we've been able to take a view on that. So this is the time that I would say pick up with either our sales hub or your local BDM to discuss that case. What we will do is we'll find out some more information, we'll be able to put that over to our underwriters and come back to you before the case comes in with an idea of if it, you know, whether it's a property that we're going to be able to help with or not. So from an affordability point of view, our affordability is either worked out at 125% of the pay rate on a 5-year fix or stressed at 140%, and that will depend on the tax status of the applicant. Also, our limited company buy-to-lets are stressed at 125%. We have a wide range of products, but rates starting from 3.13% on a 2-year fixed. So looking at some new areas of our products, we recently launched a buy-to-let large loan proposition. So initial rates for this particular product set is 3.59% on a 5-year fixed. And what we've been able to do is offer this for loans above 500,000 with a reduced completion fee of 0.5%. And for those loans that are above 750,000, a reduced completion fee of 0.75%. Also a multi-loan product, so this is really designed at portfolio landlords or landlords that are just looking to submit more than one application to us over the next sort of 6 months time. So again, what we've been able to do here is reduce our completion fees. There's no further application fee because once we've got that first case in, we're able to accept further cases with no application fees at all. Initial rates on this one is 3.39% on a 2-year fixed. Like I said before, we've got lots of different product options, so please visit our website where there's a large document section including our product guide where you're able to see the huge range of products available. So for those of you that aren't actually registered with us, you know, what we try and do is we really try to make the process as simple as possible. So you can go to our website and you can register online within a few minutes by just inputting some of your details. And then once that comes over to us, we will take a look and get you set up on the system, and your login details will be emailed back over. You'll then be able to submit applications and DIPs to us. So with our DIP portal, what will happen is you'll input all of the details, and with a DIP accept, you're able to continue on as normal. The DIPs that refer or decline are picked up by our underwriters. Because we have that manual underwriting approach, they will take a look at the case, particularly with the refers, and see whether it's a case that we can look to do. And actually we do also look at the decline DIPs to see whether there's anything that can be done in terms of overturning that decision, and we will always communicate that with you once the underwriter has taken a look at the case. From there, once you submit the application to us, again, that's all done online, you will be able to also upload the documentation that's detailed on the checklist. So you will be able to get a checklist, shopping list if you like, which will show all of the documentation that we need. And we do encourage that you submit all of that together with the application, so the underwriter can underwrite the full case when it comes into us. And finally, the system allows you to track all of the case and case updates. So we always encourage people to log back in, take a look at the updates on the system. But of course, if you need to speak to somebody, you have the support of the sales hub, but also we give you access to our underwriters. So once a case is in with us at underwriting, if you need to discuss any element of the case with the underwriter, please do give the head office a call, and you'll get put through to the underwriter that's working on that particular case. So lastly, I would just like to say thank you very much for taking the time out of your day to log on and listen to this webinar. I hope you found it useful. Please, if there's anything that you'd like to pick up with myself or the team at TMA, please just get in touch. Don't forget that TMA have a great support mortgage desk where you can call with any inquiries and they'll be able to offer support. We also have our very own sales hub as well, which is contactable on our head office number. Again, with inquiries that you want to discuss with us, please feel free to use both of those options. Also on our website, we have a section where you can put your local postcode, and that will direct you to who your local field BDM is. Please again, pick up and make contact with them if you wish to discuss any cases in that way as well. But again, thank you very, very much for taking time out of your day today to listen to this presentation.